One. Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Dan Matlow, the CEO of Vitalhub. Vitalhub trades on the TSX Venture Exchange under the symbol VHI. The company is trading at $3.20 with roughly 27 million shares outstanding, or about an $85 million market cap. I'd now like to hand it over to Paul Andriola.
Awesome, thanks, Trevor. Dan, I want to welcome you here. I think we last spoke sometime in August, and I realized since then you guys have put out a fair bit of news. Stocks hitting new 52-week highs, which is something we always look forward to. But we thought it'd be a good time to introduce you a little bit more formally to our subscriber base, and let everybody know what exactly Vitalhub does.
Thank you for having me.
Why don't we? I'll let you just start off and maybe give us sort of the 5-minute pitch in terms of what Vitalhub's all about.
Yeah, Vitalhub, I guess we've been going at this since 2016, but we're in the healthcare IT space in the software industry, and we're growing through two primary vehicles of organic growth and M&A. It's a pretty experienced group of people that have good experience being both capital allocators and operators of the business. We focused on what I'm going to call the enterprise-based healthcare sector. So we're not consumer-based products, we're not physician practices, we're not clinics, which we'll see some of the healthcare IT issuers that are out there today. So we think we're pretty unique in that we offer a enterprise-wide solutions. Our marketplace is typically hospitals, community agencies, and mental health based organizations to do this. We have two real streams, being the community services mental health sector, as well the area which we call patient flow and operational visibility solutions, where we expect to see a fair amount of organic growth to do that. So we got an experienced team. I go back about 30 plus years in the industry, 25 in healthcare IT. Numerous senior roles. Prior to this, I was the founder and principal of a company called Medworks, which became publicly traded in 2008, and so we've been on the public markets for a fair bit of time here. But we're starting to hit some critical mass here. We've been EBITDA positive for numerous quarters now. We've been cash flow positive. We're hitting the $20 million level in revenue, 70% of that in recurring nature. We've completed 8 acquisitions to date, and we're primarily located in Canada, the UK, Australia, and abroad in the European marketplace. So we're truly an international based company and moving pretty effectively outside of the Canadian marketplace. So we're happy with what it is. We're growing pretty nice on an organic basis, and we're doing some great things.
So healthcare IT, I mean, I imagine that covers a whole bunch of different avenues within that space. Give us a couple of details in terms of what, on a day-to-day basis, what does the software sort of help do?
We focus on 2 areas. I'll cover what those 2 areas are. So the one area, and it's pretty Canadian based systems. We did 4 acquisitions in the space, but 2 prominent ones. And the big product is a product called Treat, which is the electronic health record for community and mental health agencies. A complete system from A to Z, which we document the patient, do assessment, scoring, scheduling, and all the analytics that would get associated with that in terms of reporting to government agencies for compliance-based structures to do it. We've won some pretty large-scale projects with that particular platform. One in particular was with the province of Nova Scotia, where we completed about a year and a half ago. It will be a $20+ million deal over 10 years that will ramp up to $2.5 million of annual contract value, and it's really to revamp the entire Department of Community Services using our electronic health record-based system. And we think we can grow other provincial and larger regional initiatives we already have in the Yukon Territory, a larger one in Northern Ontario and in Southern Ontario as well. On those particular platforms, we do see some growth in that realm. Important to note that in that 14 million of recurring, only 200,000 of that is the province of Nova Scotia transaction. So we do expect that to start hitting our annual recurring revenue at the beginning of next year and trickle in over the next 3 years. So it's something that we highlight to our investors. The second area is the area where we really think we're getting the organic growth, and that's what we call patient flow and operation and visibility. The definition is patients are inventory. They're moving through hospitals or amongst healthcare organizations. And we like to look at it from two different areas. What tools can we give the patient to move more effectively through those areas? And how can we monitor us from a performance perspective of how well we're doing it operationally in terms of moving those patients effectively? And we look at different tools to do that. So examples would be, on the patient side, would be kiosks, where you register, or mobile-based applications where you set your appointments, or we communicate with you before you get to the hospital or when you're about to arrive at the hospital. We do a lot of pre-operative assessment-based solutions. We have a very hot product in our UK marketplace, a product called Synopsis IQ, where we do virtual-based assessments of a patient before they come in for elective surgery or for surgery. So typically the old-fashioned way, or still, so the predominant way is I come in 3 days before or multiple days before, I get my assessments, the anesthesiologist, I get good, I do my blood tests, I do all the stuff, I do the circuit, I sign my paperwork, and I'm good to go. Now we can do that all at home. We can do that for virtual consultation. We can do that using our phone. We can go get blood tests at our neighborhood lab. We don't have to go into that hospital setting before we get there. I get to the hospital, I come in through my virtual tool on my phone. I know everything that I do. I sign off all my consent forms on my computer through digital consents. I walk in, they tell me which room to go to. I get there, they're waiting for me, and I check in. No different than when you're coming into a hotel and you have everything you need. So it's one of our prominent solutions that's selling pretty well. So that's the one side. The other side would be the solutions that would help the hospital. So how do we give you analytics of how well they're moving? How do we make sure that patients aren't staying in a hospital longer than they need to? How do we make sure that the right patients are in the hospital, that they're clinically being assessed? How do we move that around? So we run various analytical platforms where it will culminate into a command center. Look at it as like a Las Vegas book room, or a NAC in Nassau, where we'd have this command center where we see all this data. We've also moved to doing that in a regional basis, where we can take data to present not just to hospital employees, but government agencies and so forth that would want to see that data on a consolidated regional view across multiple facilities. A good example of that would be elective surgeries. How do we get a snapshot of 7 different healthcare organizations, or dozens of them, how they're performing elective surgeries, so that we can move elective surgeries around multiple base facilities? So we would offer those type of services as well. So we've really through 4 acquisitions have accumulated, and we expect to do more, a large suite of these patient-focused flow and visibility type of solutions that we think is a really strong narrative on a go-forward basis.
Well, so we covered a lot there, but it opens up a bunch of questions. So predominantly, do you sell into sort of universal healthcare systems, or do you do any private healthcare systems?
Yeah.
You talk about Canada and Europe, obviously, you know.
Yeah, it's actually an interesting world. You think of a Canadian, and the natural action is to go, south into the United States, where all the growth is. And actually, for someone 30+ years in healthcare IT, and I spent 9-10 years of those selling software for an American company into American-based stuff. We actually stay away from that to a degree. We like to go into government-funded based healthcare systems. We think there's less competition for acquisitions, less competition in the field, a different landscape, a landscape that really understands what we have a lot more than what the US-based market. So we like the UK, we like Canada, we like Australia, we like Europe, and we have implementations in Mid-East. So we have implementations in all those places of our solutions. But our big marketplace are still Canada, and the UK. UK is probably our largest market. We also like the exchange rate in the UK, and we like the euro as well on that stuff. So we are active there. We've done 3 acquisitions there, and we expect the predominant amount of our work to be acquisitions in the European and the UK market.
Okay. How big is sort of where you're active geographically? How big is that addressable market to you guys?
Yeah, we like to think in beds when we think of hospitals. Mm-hmm. So, in terms of how many beds that they did, we got about a $13.2 billion marketplace. I think there's a slide in our presentation that was said it. We got about, what do we get? About 50,000 beds under contract that we have. We think that market is, multi-million, is like a 3 million bed marketplace. I think you look at 500 beds, it's like a 13-something billion market segment that we extrapolated. There's no shortage of opportunities on that patient flow operation visibility solution. It is lagging behind on those solutions relative into our US marketplace. We know healthcare will be moving to those type of solutions, and we think we're in a good position for it.
So you've been doing a lot of M&A. Why M&A and not organic? What's the advantage to acquiring companies?
We've accumulated all of our acquisitions. They've cost us $35 million in between a combination of stock and cash that we've used, mostly cash with some stock in the early days, and there's still some stock in our deals. So for $35 million, we've translated that into a $21 million company with about $14 million of recurring. We could never have grown a company to $14 million in recurring and $21 million in revenue with $35 million of investment capital in a 3-year period. It's just impossible to do. So it's a slow-moving space, especially in government funded. We're going to grow faster through acquisitions or organic. When we do acquisitions, we're buying technology. We like that. We like synergistic technology. We like good people that have been in the space that are domain experts. But we love recurring revenue. We only buy things with 60% recurring revenue. We're SaaS-based, but we really love the customers because upselling in a government-funded based agency with new solutions is 10 times easier than going in from a standing start.
Okay, so clearly you're buying relationships. You're buying the customers. Okay.
Yeah, fantastic. We're buying a lot of that for sure.
Yeah. Okay, perfect. You touched on it a little bit. So right now, what's your breakdown in terms of your recurring revenue and any kind of one-time revenue you generate per year?
Yeah, like I said, we look at a statistics which we call annual contract value. That's taking only our recurring software revenue, and if we annualize that, what we get on an annual basis per customer, and we do that. It's getting close to about a $14 million level, and it's growing pretty nicely on a quarter-to-quarter basis with some of the things that we've been doing. The rest of the revenue that would make up the $21 million, we do have some one-time license sales for some type of our products that would go in there, but the majority of that would be services and implementation fees to implement that, with a big amount of that being our Nova Scotia transaction that I talked about earlier, where we're a little bit in custom development mode for that before it gets rolled out, and that will translate into user fees afterwards. So that's a big emphasis. Again, we don't get the gross margin that we like, but if you predict when that stuff starts coming in, there'll be heavily more gross margin in that particular area.
Mm-hmm. Perfect. Maybe explain some of the organic or the sales process. What's it like to sell into this from an organic standpoint to this customer base?
Yeah, it's a unique environment. You go in through partners, you go in direct, you go in through experienced sales reps, and you go in through upselling stuff. We do a fair amount of marketing, and we do a lot of customer selling to each other customers. So a lot of what we call osmosis or bleed sales, where the neighbor gets it and it gets referred, and things get a little bit viral within a geographical area. So different countries have different needs from reporting to government entities. So you do have different niches of different products which do better in different niches. So we tend to look at those things as components, but we have direct sales, we have partner sales. Sometimes sales cycles are really long, and sometimes they surprise you and they're really short. But I think when I was speaking to In Touch, which is one of the companies they just closed the deal, and they said, "Oh, it was only a 7-year sales cycle." We've been speaking to them for 7 years, just joking. But you got other things that could happen in 5-6 months. But it is government. It does take time, but it's really sticky, recurring revenue. It's as sticky as you can get.
Mm-hmm. And are there RFPs involved in these sort of any time? Do you ever see this? Yeah.
For sure, we do tenders. Again, by buying customers, you alleviate a lot of tenders, you alleviate a lot of bureaucracy. Through that process, we do tenders. Nova Scotia was won through a tender. We do it, but we also are on what's called selective frameworks, where the government or an entity will do one particular RFP, of which they'll pick 3 vendors that can supply that particular solution in the space, and to avoid RFP, the hospital is allowed to buy any of those 3 vendors. So it's slowed down. It isn't one RFP to select those 3 vendors, and you have your pricing, and then they compete after that point of view. So we're on a lot of those different frameworks, both in Canada and in the UK and other areas as well.
Mm-hmm. Maybe give us a sense of what the competition looks like. Who are you guys up against?
Like I said before, it's a fragmented space, mainly because there's 2 parts to healthcare applications. One is, which I'll take, taking care of the patient or the information, and the other part is the reporting to the government and area. And what that does is creates an opportunity for niche players to get into different geographies, because you're not going to build that government reporting for a small market. It's just not worth it for a big company. So you do find these small players. Those also represent an opportunity for acquisition. So those would be acquisitions that we would do and so forth. So it tends to be smaller players, not in some of the areas, that's what it is. It's not that many of the big players. We play in the periphery. We don't compete against the large EHRs that are in the US. It tends to be peripheral based solutions, and it depends on the geography. We have different competitors in the UK than we would in Canada, and vice versa.
Mm-hmm. And then as far as the competition you have right now, what would you say makes you better? Why would somebody select you over somebody else?
Some of our solutions are definitely the best in the market, and some of them are good enough solutions, but we have a lot of good ones that are there. Just your typical ease of use feature, full body based features and so forth that go with it. We're really starting to accumulate a differentiator by just having a suite of different solutions. So we can give a vision, and we can connect multiple systems together, just get a more comprehensive based solution. Where one vendor might sell a kiosk into a hospital, we would have the mobile version, or we'd have something, a virtual receptionist or wait rooms, or we would have that pre-assessment product called Synopsis. Each alone is it is competitive by itself, but when you combine them all together, it really starts giving you some competitive insight into it.
Gotcha. Obviously, COVID has changed the way a lot of industries do business. Obviously affects the healthcare industry quite a bit. What can you tell us in terms of how it's changed both the way you have to operate and maybe what the challenges or upside are because of it?
Some of our solutions have suffered and some of them have thrived. It's an interesting thing. Like our Nova Scotia project got delayed for about 6-7 months. They just didn't want to keep moving that project forward, and now it's going again due to COVID. But the things like that Synopsis and that elective surgery thing have thrived during patient flow. We have other products where in order to get that done, we have to do an on-site type of analysis before we go in there and actually look at patients and do things. Well, we can't do those type of things. So there has been some effect in terms of some of the solutions, but there's other solutions that have been taking. But overall, I think what we're really looking for is, we think we're still doing nicely, but we do think when this is over, and it will be, the awareness of what digitization and new worlds of virtual will be open. Hospitals and that barrier to use technology has sort of been knocked down a fair bit, and we want to be on the right side of it. So that is the one certainty that we know, and that will take time for COVID to be over, but we think we're in a good position and more acquisitions, and we'll just keep on.
Has COVID affected sort of R&D? Are you guys looking at new products or services because of it?
We definitely have looked at virtual where it was applicable. We didn't have a virtual solution in our electronic health record, and we didn't build that, but we have partnered with other people to build that. We have a partner in upstate New York. We got another one in Canada, and we've had to integrate to some virtual-based systems, to do that. So we've done that, but we do have our own virtual systems for in the hospital side. I talked about the assessment-based solution and other things. So we do have virtual solutions that are there that were sort of there before, but we've got a, as customers gave us feedback, they started using it. We've had to go quicker to get that stuff just cleaned up a little bit and just get it more user-friendly and things like that. So we have focused our R&D on some of those issues for sure.
Okay, cool. Okay, so M&A, always tricky to get it done right. Maybe give us a sense of what your team's background is in terms of M&A.
I think we're pretty good. We've done it as a testimony. I got 30 plus years in the industry and have done a lot of different transactions. So I spent 4 years at OpenText, and that's probably the, as software companies go in Canada, is probably Enterprise Software is one of the leaders in terms of doing M&A based work. So got some good roots in there. And Medworks, the other predecessor company, we bought a couple companies that was primary organic growth, but we did sell our own company. So we do have good understanding of that. But we were also smart enough to surround ourselves with some pretty good people. One of our lead investors is a gentleman named Francis Chen. Astra Technologies, which grew nicely on the TSX, was a complete M&A based, structure-based business, and sold off to Mitel. Very smart people. We put an M&A committee together. He heads it up. Also on that committee is a guy named Alan Brett, who's the CFO at Descartes, which is a master in M&A. A guy named John Tabaya, who works for Sangoma, again, another company that does M&A, and he worked at Enghouse before. We know the Constellation, we know Enghouse, we know the models. We've done work with Balsaf Capital, which is another M&A privately company out of Quebec, who's an investor. So there's a lot of studies and done, and we've really established a pretty a good cookbook and a good methodology to do these things, and would put some rigor of how we get payback, and we really study these things carefully.
And I think I saw you've got about close to $16 million in cash as of the last quarter. Is that sort of sufficient if you guys, to continue your acquisition strategy?
Yeah, we got about 8 million left right now. We completed two acquisitions last 2 quarters, so we used a chunk of that and did a little bit of placement along it. 8 million could get us another acquisition. We will probably at some point maybe go to the markets depending on what's done. We also have debt facilities that are coming forward with the EBITDA that we're producing. We do believe we can service a fair amount of debt as well. So we'll explore all those avenues and come up. It's all going to be opportunistic. Depends on what M&A scenarios are coming at us right now.
You got a phenomenal team, the Shen family, and the connections you have. You've obviously attracted some good people on that side. But maybe we love to invest in guys who've sort of done it once before. Maybe give us a bit more history on Medworks and start to finish in the eventual acquisition.
Yeah, Medworks. I started Medworks. I was a pretty entrepreneurial guy. We started Medworks after. I had a company that was sold to OpenText and then did 3-4 years. And I said, that's enough of Big Co. I'm ready to get going on something on my own. And actually Medworks was a company that started off, it was a content management platform that this little group was trying to sell to OpenText, and it was just too small and they didn't want it. And I said, this is interesting. I'm just going to go buy this myself. And off we were. And then we purchased a patient flow-based solution. Similar to what the MCAP solution is that we bought. It would be a competitor to them right now, Medworks would be. And we purchased that out of a hospital that was built in St. Thomas, and off we were and running with it. But after that, we just stayed organic. We kept growing and kept expanding and went international. And then we went public and learned the public routes. We had chances to do M&A there, and we declined. We decided to be in it. Hindsight being 2020, maybe we could have grown faster and did it. And then, we had some key investors, and it was time. We got an offer, and we divested. And then I said, this is what we're going to do next time. We're going to do M&A, and we're going to get focused. So we're just going to grow quicker if we're going to be public. That's the better way of doing it. And here we are. I think the investment thesis so far has been correct, and we've continued. We didn't have market caps like this at Medworks, nor we grew, but we grew organically. It takes time to do that, but it was successful. Everybody made money. We were happy with it, and it was good. But this time we just wanted to do it bigger and better, and that's what we're trying to do.
Mm-hmm. Fantastic. Let's talk a little bit about the stock. I see 26.6 million shares outstanding, roughly. Give us a sense of insider ownership and maybe the makeup of the.
Yeah, I don't have the exact number. I'm going to say we're about 25-30% there. I think the presentation, I don't have in front of me, Paul, but it's a big chunk of it between management. Remember, we've given shares away as part of the acquisitions, and those are all escrow shares, and all those players are key involvement to do it. The Shens have invested pretty considerably to that, and then the last round we did was with Burgundy, which owns 20% of the company. So it is a tight float relative to what we think that's out there on the share structure. We do think relative to other valuations, it's still pretty attractive, considering we're a pure software play where others are clinics. We're running at large gross margins, large recurring, international presence, experienced team. We think we've got a lot of those credentials that are there. But yeah, that's what the share float is. We do have a pretty big institutional following at this point. I think we're up to 4 analysts that are covering us, and I do believe there's probably more that will be coming shortly based on questions that we've been asked, although not for sure, but it does seem that is a trend. So we feel like we're in a pretty good spot right now.
Certainly. Gross margins, you mentioned it, brought it up. What are sort of the trending gross margins right now?
Yeah, we think we're running about 75%, 25%, whatever you look at either way, right? In terms of the gross margins right now. And the software side is definitely higher. The services is lower, which gets it to that level, but it's still pretty good. In the 70s, some of the range that we're running on the gross margin side.
Perfect. And before we jumped on the call here, you mentioned that you guys are taking a lot of investor calls right now. What are you guys doing for investor relations? How are you getting your story out?
We haven't, retained a firm as of yet, although we're exploring. We've been on the street a number of years, Brian and I. A lot of the bankers have taken us around. We are one of those organizations that is doing M&A, so cash is there, and the bankers have been doing a fair amount of that work to do. In the early days, we were all retail based. So we got good databases. Our marketing group does do that to some degree in terms of keeping awareness out there. So we are out there, but we haven't formally retained a firm as of this point.
Okay, fair enough. And then where was I going with this? Sort of the overall growth, you'd mentioned that you've got some contracts in play right now. Are you able to give us a sense of current, call it bookings, or what the revenues look like a year from now based on the business you've got in hand?
Yeah, recurring is always because you defer recurring revenue, it doesn't come necessarily into revenue, right? So right. So we're sitting, we'll walk into next year probably north of 14 million recurring. So that's in the bank, and you're going to get your Nova Scotia and your stuff, and you're going to close new deals, right? But it all depends on what you close in the early part of the year. But you can sort of do the back of the napkin calculations to get to that point. So it's it's definitely north of the 21 range. We're going to get, we are growing organically pretty nicely on those things. So, when you can add another 2-3 million of recurring onto that, top of that, something like that type of range, right? Is probably where we would be, type of thing.
And then as far as your continued resources for growth, what do you need? Manpower? Do you don't need capital for M&A, but give us a sense of, if anything, you wake up tomorrow and say, I want more of this, what would that be? We're
pretty experienced in this space, and we use a term here called responsible growth. So, that's where we like to do things. Where does that go from, in terms of what it is? So we don't think we need many more people. We're not expanding into our organization. If it is a very important metric to us, we do think we got pretty good sales structures and people. And in the UK, when you start combining things, you start getting economies of scale on things like that. So we're not planning on really beefing up our sales and marketing expenses or percentage of sale per se to do that. So we're not looking to ramp it. We think we got enough in our pipeline and a good focused go-to-market strategy there.
Okay, good. At this point, I want to remind everybody that if anybody listening has some questions that you want to ask, I know we've covered a fair bit so far, but feel free, guys, to use the chat function, throw in a question there. Okay, that's good. Any thoughts of ever listing, sort of graduating from the from sort of the Canadian
I
market?
think we're starting to. I can see that a lot sooner than later at this stage. I didn't think but we are starting to check the boxes in terms of the revenue, the market cap size, and things like that. So we would approach that at the appropriate time, and it's probably starting to get closer to that. But we're okay for now, but that probably would happen at some point.
Gotcha. Okay, we got a questions come in. I don't know if you can answer this exactly, but a question we have is, what's the likelihood of getting business in New Brunswick, Newfoundland, Northwest Territories? You'd mentioned that. Is that business you have coming, or is that stuff you're
we do a little bit. We do have a couple of small little community agencies in New Brunswick as customers already. We do believe that Nova Scotia project will help other maritime projects as we keep going. We do have a project in the Yukon Territories now, which we have, which is similar to our Nova Scotia project, and we do think Northwest Territories is pretty close to putting something out that will be similar to that. So we do like the smaller maritime or those things more than like trying to get an Ontario-wide deal for our platforms. It's a little more difficult. But I don't know, I'm not sure when they'll decide to come up with a common platform for community mental health or patient flow based stuff, but we would be in good position to compete and hopefully win that business at the right time.
And are you actually selling to individual hospitals, or is it province-wide, or are you selling it to the different sort of health regions that are out there?
I think your answer is all of the above, depending on the area that you're in. In Ontario, you could either sell to regions or individual hospitals. Smaller provinces will procure at this stage one system on not all the time, but often, depending what it is, on a provincial-wide basis to do that. So we have one deals that way. Depends on the type of product that it is. And so you do see, little piecemeal stuff or regional stuff. It all depends what that government, that area has done from a structural perspective to do that. That's how that would be in Canada. Different areas would have different different things. UK is run by something called the NHS, and they tend to fund and put standards in place and do these framework deals where you could get a choice of a certain amount of vendors, which we're on a lot of them, but they'll never buy for the entire NHS. It doesn't work that way. So, but they do limit the amount of vendors that can participate in that area in some degree. So it all depends on the area.
Gotcha. So I mean, Vitalhub's still, I'd say, a relatively obscure company. Not too many people that we talk to know it. Do investors have any kind of misconception? Are you aware of anything that the investors are getting wrong about the business, or?
Yeah, we like to think we're good at M&A, and we are good at M&A. We think it's an important part of what that is about. But investors, I think, get a little bit more jazzed up by the latest whiz bang and the organic growth in terms of what it is. And we think we have a fair amount of those sharp knives in our arsenal as well, with some of our solutions to do it. They don't get highlighted because it's not just one solution that's sitting there prevalent to do it. But I probably could have came here and said, "Oh, we got this great virtual care pre-assessment based platform. That's all we have, and this is the world market, and this is what it does." And people might get more excited about that than they will about this type of thing. But we do have those solutions in terms of what it is. but we're smart enough to know how that is sold in particular geographies and the realistic basis that you're not going to sell that around the world to everybody, and how you go at that from a targeted market and just try to get that. But it is producing, you know, when you do 100,000 pound deals, which I guess would be like under 60, 70,000 a year for one hospital trust for something like that, it doesn't take a lot of those to add up to get, you know, some nice organic growth that we like to do there.
Perfect. Dan, it looks like we've done a great job talking because we've had very, very few questions asked of us. So that's a good sign. Okay. Seeing that we don't have any other questions, what we always like to wrap up with is if you can just give our listeners an idea of what to sort of look for over the next 6 to 12 months and give them a good sort of parting point to know the business.
I think as we get more meat on the bone and do more acquisitions and see more organic growth, our numbers will get better over time. So, you know, we are having more acquisitions. They're more in play, and as you get more things on the bone and you give us more time to transition some of our costs to our offshore development group in Sri Lanka that we own, you know, costs will come down, revenues will go up, and our arsenal will keep growing. So it's just compounding what our business case is and what our investment thesis is, just should continue to grow over time. So every acquisition has more customers is more sales, more acquisition is less cost, and more revenues and percentages. And it should, you know, get itself to getting to that interesting point where, you know, cash is circulating and what these companies can do. So it doesn't happen overnight, but that's the direction we're going into.
Fantastic. Dan, so to summarize, I'm going to say Vitalhub, nice business that's growing quite nicely, both from an M&A point, organic point. You guys are well positioned within the healthcare space. Very healthy balance sheet, a great team running it with some pretty significant outside investors that are on site as well. Dan, I really want to thank you for this opportunity to talk to you today. We look forward to following what you guys are doing and hopefully getting some updates in the future. So really appreciate the time.
Thanks, Paul. Thanks, everybody.
Excellent. Thanks,
Bye-bye.
Trevor. We'll hand it over to you.
Yeah, thanks again, Paul, and thanks, Dan. And Dan, before we sign off today, if investors want more information on the company, where can they find it on your website?
There's an investor relations page, and there's ways to do that. They can get in touch with me. It's dan.matlow@vitalhub.com. You know, my information is pretty readily available, and there's information forms and so forth to keep getting information. We're always available to answer questions, so feel free to get in touch with us.
Great. And the website is, sorry, what was that at
www.vitalhub.com.
Okay, perfect. Thanks, Dan, and thanks again, Paul. And as Paul mentioned, we're looking forward to some of the future acquisitions out of the company and following up with you soon.
Thanks, guys. Good luck with everything.
Thank you.
Thank you.
Bye-bye.